Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, time for an update on gold and silver. It should be a pretty speedy one, this should be. So we're going to start here on gold, and we're going to start with the Elliott wave count first, and then we'll finish up with a little bit of, well, we'll include some classical analysis as we go, I think, to try and save time. And yeah, we've either bottomed or we haven't. So there you go, Einstein. Brilliant deduction there. But I'll talk you through what I mean by that, because it's very tempting to think the recent low is a low, and it could be. It could be the low. But we are missing one thing that I would have liked to see. Now, that's just probably me being a little picky, but it is what it is. So let's have a quick look at what we've done here. Right, so we're assuming we're in a flat pattern. Right, but we've got 3 to here, 3 to here, and 5 down. 1, 2, 3, 4, 5 potentially done, but potentially an extension in the 5th to come lower. Right, or the 5th wave will be slightly extended. So we've come back to support prior lows. We finished just shy of them. The support was around 1678.58. We've come back to a 1-to-1, but not quite, just shy of it. Okay, of the length of the A projected from the B. Now, Elliott says in the Elliott wave principle, let's just move this to the absolute exact point, that the wave C of a regular flat will almost always finish beyond the A, and it hasn't here. So this is a rarer occurrence than the norm of the C finishing beyond the A, and therefore probability is on the side of a further move lower to get that lower low for the C. Now, if you object, that's fine. I'm just saying purely from an Elliott wave rule perspective, it is far more likely for the C to finish beyond the A than to finish truncated like this. So, on that basis, I've got the count as having a wave 1, 2, 3, 4 at minute degree within the 5th, and the 5th wave to come lower. Now, that's fine, but like I said, the low could be in, but we've got an invalidation point here, 1805.20. If we break through this, then we can have confidence that that low was the low. At that point, we will look for a 5-wave move to complete to the upside, and a 3-wave pullback in the form of a flat or a zigzag or whatever really correctly formed to pull back, and then we can label that 1 and 2 to the upside, and then we can trade it long. So either way, we're not really stressing out because we've got this invalidation level to help confirm this is the low. If we roll over prior to that invalidation level, we can expect a lower low for the C to finish beyond the A, and then everything's hunky-dory and we've got a completed flat that's much more common, much more normal. So that's the picture as I see it at the moment. Low could be in, but a more common occurrence would be for the C to have finished beyond the A, which has not done so here. Right then, so now that that's said, let's remove the primary count for the moment. Alternate count, I cannot get a true alternate count. All I can do is change the current count to make it more bearish. So the idea that all of this was a 1 and a 2, and then this is an extended 3. It's going to go a lot deeper, 4 and 5, right down to the 1618. I see that as less likely due to the fact that it's a regular flat, not an expanded flat. The B did not extend beyond the start of the A, so it's less common for the C to be that drastic. It's far more likely for the C to share parity with the A and complete slightly beyond it, which is what we're expecting. So that's the only thing I can offer as an alternate. I can't see any other way of counting it at the top here. I don't see an impulse here. Alright, and a 99% correction in the 2, even if this was an impulse or a motive wave, seems far less likely than this just being a flat pattern. Okay, so that's always been my preference. Okay, so let's turn off the alternate count now as well. So let's have a look at some evidence that helps support the idea that this is a significant low. So we've got a def cross on the daytime frame, 60 exponential moving average through the 250. Def cross normally signifies, as I often say, an imminent low. That means within a month, within a few weeks. Now in this case, we've got from the def cross to the low, it took 14 days, 10 bars on the chart. Now if we take a look at a previous def cross, like back here, they can be longer, they can be shorter, but they're always signalling a low coming. In this case, it was only 7 days depending if you take that candle or the one before it, 6 days. Okay, so this is synonymous with a low forming, but as you can see, it doesn't have to be the bottom. It's just a low on the day time frame, a significant low on the day time frame. That's what we've got. So a wave 4 of a lesser degree could be considered a significant low, but it could also be a bottom. Right, so this is either an impulse that's going to break this level, or this is a zigzag that's going to roll over lower. That really is basically how I see gold at the moment. If we look at our indicators and see what we can see, RSI on the day time frame got very oversold down here at 1866. Basically as oversold as we have been during this entire correction over the last couple of years. Very strong pop from the strong support down here. So we've gone from overbought to oversold in this move down. We've stayed within this parallel channel as well on our way down. As you can see, this is 1 to 2 to 3 to 4, and now looking to find 5. 5 finishing just shy of the channel, that could be totally acceptable. One more further move down to it, that could be acceptable as well. Positive momentum forming, heading back towards the zero bound with the average here, signal having crossed through it, and building green bars on the histogram. On the weekly time frame, still trend a negative momentum on the MACD, still trending downwards. We've got low, higher, low to here, a high, lower low. Will this be a lower high, or are we going to get a bullish cross here? Bearish momentum starting to die off, looking for that cross to occur on the MACD and to push back up into positive momentum above the zero bound as well. Second round trip we've done within this double top correction here, so a flat pattern is often a double top, or a 3 4 5 1 A B C, and a zigzag is often a double top. We're saying this is A and B C for a flat double top, which means that we're not going to get the big breakdown people would traditionally expect from this pattern. We're going to reverse and head higher. So we've done overbought to oversold in that initial move on the weekly, and then we've done overbought to oversold again. So there's our 3 legs of our flat pattern. Okay, so yes, you've got classical arguments here with the death cross on the daytime frame, with the oversold conditions on the daytime frame, with the oversold on the weekly, with a strong weekly candle here off of the low, and an even stronger bullish hammer on the monthly. There is a lot of classical evidence to suggest that was the low, so I'm, believe me, having a hard time arguing against it from a classical perspective. That's enough to have found the low. Alright, I'm just saying, from an Elliott wave perspective, the flat pattern finishing truncated is much rarer than it not. That's all I can really say on that matter. So, invalidation point, reminder again, 1805 spot 20. Break above this will give us more confidence that this was the low. We're looking for a completed move up and the pullback to confirm 5 and 3 to the upside. That's gold. Let's come over and have a look at silver. Now silver, no Elliott wave count at the moment, we'll put that up in a minute, had an extremely strong move off of the low. Okay, on the weekly, closing at the highs for the week. This weekly candle was supported by volume, as you can see here at the bottom. 1 2 3 4 5 prior weeks of negative price action, all surpassed by the volume in this one bullish week, which is a huge bullish weekly engulfing candle, gobbling up those 3 prior bearish weeks. Now where did we come to? We came straight back to the point of control pretty much of this impulse wave to here. There we have our high. We have this as a swing high, which is similar but different to our gold count, where we do get a new price extreme in silver. We did not get a new price extreme in gold. Okay, so if we project that point of control into the future, we can see that it was basically, we were sandwiched between the 61.8% golden ratio of this move here, pulling us back to the 61.8, and we can see that the point of control was just below it, and we basically body the candles 1 2 3 weeks in a row on the golden ratio, and we have an intra-week move into the zone around the point of control as well. So essentially we've come back to a major support level. And if we throw our support and resistance folder on, you can see that we're sandwiched between two support zones at 16.63 and 17.76. So golden ratio, point of control of the prior impulse, two strong support zones that were prior resistance, going back in the chart, now becoming support, supported by volume, big bullish engulfing weekly candle. Yeah, it looks like a low. From a classical analysis point of view, it looks like a low. Alright, so now on the weekly, we've had the 10 through the 250. Now the 10 through the 250 as a 60 through the 250 on the weekly time frame, and the 20 through the 250 on the weekly time frame operate in a similar way in terms of predicting lows as a death cross. So we've got a death cross 2 weeks prior here occurring, and then this big pop. More evidence to suggest that that's a sustainable low. But it's too early to start celebrating yet. We need 5 up and 3 back, and for this low to hold. Then we can know that we've bottomed. Okay, now I don't have the same problem in completing the count here as I do in gold, so I'm more confident here in silver. Although I'd argue that I'm less confident in the overall structure of the count, I'm more confident in the having found support at these levels. I guess that would be a fairer way of explaining it. So let's just come into the daily time frame for a moment. Now, a bit more detail here on the 8 hour as we can see the smaller wave degrees. So 5 up, big extended fifth, huge extended fifth here in the SLV. Now, a lot of hype was going on during this time in this extended fifth wave, and some even more hype brought us to a new price extreme here in an X wave. Now, not ideal. I'd like to have A, B and C for 5 as a flat, but I just can't subdivide it in a way that I'm happy with. So the best I've been able to do, and I've gone back and forth on this a lot, is that we had a diagonal within a diagonal. So a diagonal 1, and then 2, 3, 4 and 5, contracting diagonal to get an A wave. Here we then had a double zigzag into the B, and then we had 1, 2, 3, 4 and 5 down here in the C. This completing the A, B, C, larger zigzag of the Y. So W, X, big ass zigzag, Y. I hope that makes some sort of sense. Either way, what we need to know is a seemingly impulsive move to a high, a big, long, weird, wonky pullback to the golden ratio, and a big pop. Right, that's what we call the golden corner. Okay, that is a buying opportunity. The odds are on your side that you will make the median line of that pivot. So let's just have a look at what that looks like. If we can get the top, there we go. So the median line, unsurprisingly, if we take a look at it here, we've got lows, lows, highs, highs, highs all around the median line. Here's our golden corner. 80% probability we'll make it to here. Okay, now how we do it, how long it takes, yada yada yada. But we've got a strong probability now of an impulse up, correction back to the golden zone, 80% probability of pushing up here now to the median line. Now, it's not ideal yet because we want to see an impulse. 1, 2, 3, 4, 5 and 3 back. At that point you've got another potential 50 or another potential golden corner off of a smaller pivot. This is what on a larger time frame in our group I would call the STS standard trade setup. A impulsive move up, a corrective move back, a impulsive move up and a corrective move back on a smaller time frame. That gives you a 1-2, 1-2 structure of a larger impulse. That is about as good at odds as you're ever going to get. Okay, and that's what we're trying to look for. So there we go. I'm much more convinced that a low's in silver. Right. I have concerns over the flat pattern in gold not doing as a flat pattern should, but sometimes it doesn't. Rare occurrences are rare, they're not impossible. They happen sometimes. Okay, so that might be what we've seen in gold. We may have bottomed in gold. Classical analysis supports this being a strong low, but it is not yet a confirmed low. We need another move up and back from that level above this prior low. In other words, we need a high and a higher low to form. Okay, and we need an impulse and a correction to do it, or a motive and a correction to do it. At that point, we're long, big time styly, and we are going off to new highs. Right, from a Elliott Wave point of view, we're going off to new highs. So how we do that, God knows. It could be 1, 2, 1, 2, 3, 4, 3, 4, 5. You don't know how long it's going to take. It could be super aggressive and do it in a few months. Right. It just, we'll have to wait and see what happens. But either way, back to the major support, back into all this prior trading, back to the 61.8, back to 2 support zones, back to a previous point of control, and nice looking geometry as well with all the previous price action within this pitchfork, and the strong pop supported by volume. I don't think you need much more to convince you that this is a low. Okay, so looking positive here in silver. Let's have a look at the weekly indicators here. Okay, overbought to oversold, finally completed on the weekly time frame here from our where we've got our wave 1. The intraday, the new price extreme was done on extremely strong divergence, a sign that we were not done correcting and we're going to move lower. Very obvious. In hindsight, it always is. From overbought all the way to oversold, strong pop of oversold at support. That looks pretty damn strong to me, that does. So still got itself to prove, but looking confident going in into the future here with silver. Still got no bullish crossover on the MACD yet. Bearish momentum does seem to be dying off. Volume supporting the recent move. OBV still trending up, even though we've been in a weekly, several multi-weekly downtrend. That's extremely bullish. Okay. No weekly bullish divergence to speak of. Still got strong negative correlation with the 0.96, strong negative correlation with the dollar. Come down to the daily and see what we can see. Positive momentum returning on the histogram here in the MACD. We are still below the zero bound, looking to break those previous highs in the MACD to stop this sequence of low, higher low, low, higher low. Right, now we've got a high and a higher low here. Sorry, so I should say low, lower high, low, lower low. Excuse me. Now we've got a high and a higher low. We want to see that continue into positive territory now. Bullish divergence on the daily time frame, on the longer term between these two levels here. Okay, and some sign of bullish accumulation on the daily time frame on the OBV, flattening out as price continued to move lower. Alright then, so I think that's everything we need to discuss today really. Looking pretty positive with the precious metal space at the moment. The first move off is often the sucker kind of move. It's the one which gets everyone super hyped, and then you get a deep retracement in the 2 which gets everyone super negative, and they think, oh, it was just a feint, it wasn't really a rally. We come all the way back, everyone gets out of the trade, we find a deeper low, and then we move. So we're looking for that 5 and 3. We don't want to jump out, we don't want to jump out of our beds just yet, but looking sound for the future. And if this is 1 into 2 and this is the beginning of 3, I wouldn't stress over time frame, because we got a big ass 3 coming, which is going to be multiple times the length of this 1 potentially. So happy days for gold and silver ahead if this turns out to be correct. I will say if until I see it confirmed. Right, there you go guys. Thank you very much for joining me. If you're new to the channel and you like what you're seeing, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. And as always, a massive thank you to my Patreon subscribers. Your support is greatly appreciated, especially at the moment as my output is not up to scratch because it's a summer holiday and my kids are at home and I'm just so busy. So I really appreciate your support at the moment. And yeah, we will be carrying on with our weekly live streams throughout the summer, so make sure you tune in. And if you're not a Patreon yet and you are interested, there's a link in the description box below. Head over, have a read of the tiers, see if you're interested, and feel free to sign up. It's the perfect time to do it at the start of the month. Alright guys, take care and I'll be back with you soon. All the best. Bye bye.